One of the oldest forecasting tools of new bull markets has just hit a new high, but does it really matter in 2023? Hello, ladies and gentlemen, and welcome back to the Daily Show, where we discuss stocks, commodities, and cryptos. We'll be talking about the Dow Transportation Index and its new high that we've just seen over the last 24 hours, and of course, the critical levels that the stock market is reaching that we've been talking about for almost over a month now into earnings season. What happens here will be very important. And of course, with dark pool prints coming in early, can that mean that someone in Wall Street has already made a decision? Join us as we cover everything about markets together right now. Well, welcome back, everybody, to the Daily Show, where we talk about markets around the world. We'll be covering the macro, leading indicators, and the hottest charts together today. But let's talk about Disney. It broke down, new break of support, new levels potentially in the horizon, and it's not doing very well. Verizon was also a surprise there, negative 7.5%. But it hasn't been a good stock for a while. And then we have semiconductors and banks reversing their sell-off after the news reports on Friday. What will happen when we get more earnings this week? Those will be in focus. Let's talk about this screen here, though. 4 amazing charts. First up, central bank liquidity versus the NASDAQ. We know they are disconnected. They are the most disconnected they've been in a very long time. Has this stopped working, or is it actually the shadow liquidity that's holding the markets up at this point? We need to be watching this, and of course, a lot of macro people are looking at it saying, what is going on in these markets? I don't blame them. The next one is CPI. We know that inflation is decreasing, and in fact, we probably expected that. But what we don't expect for it to do is just continuously go down without at least a blip. If we look back in the 1970s, there was always a blip, and it sounds like a lot of reports coming out across like most of the big banks and most of the big banks research reports are showing that there's going to be a bit of a spike in inflation coming over the next reads. Do you believe that's true? Check it out. Let us know in the comments down below. US retail sales contracting as well in nominal terms. First time since 2020 is this demand destruction playing out in the retail sales line. I would say it probably is. I'm noticing this through a lot of collectible markets as well. We covered before Rolex watches. Yeah, that's a read. Also comics, also used cars, all starting to decline on the secondhand markets quite a lot over the last couple of weeks and months. And then, of course, US labor market is weakening, but no recession yet. We know that we'll be watching non-farm payrolls quite a lot in the future. But let's go through one of the big reads, which is always the data. What has historically happened around these times over 25 years when we consider just pre-election years? This is around when we start to see weakness. And in fact, the weakness usually ensues for the next 2 to 3 months. And then traditionally, actually, it continues to go up. Now, if I overlaid the chart of this year onto this, we're literally sitting pretty much the same thing. We saw weakness through February. We saw weakness through, of course, that June OPEX. But now comes earnings, and it's all important. And when we're talking about earnings, we need to know how many big results are coming out and when do we care and when do we not care. Well, did you know that over on our Twitter, we posted 80% of S&P 500 equity caps will report by August 7th. So basically, over the next 3 weeks-ish, we will know all we need to know about earnings, and we'll know the winners, we'll know the losers, and more importantly, we'll have the ratios that are important. We always cover that every earnings season, so stick around because we will be looking at it, and it's going to be very important. Look at the forward guidance more than anything else. And this brings us to our next point. Will ERP actually start to be the problem? Now, we know Morgan Stanley's Mike Wilson said at the beginning of 2023, I believe, or he believes, that ERP is going to be a big deal. That's equity risk premium. And basically, he thought that this would become an issue sometime in the markets over the next year to 2 years. Has it become an issue so far? The answer is absolutely not. But risk-free rate, which is, of course, putting your money in like cash or term deposits or treasury notes or whatever else they consider that for, is very, very good at the moment. You could be able to get sometimes upwards of 6% plus, even upwards of 7% in some of those investments. Now, that being said, what's the average stock market return? Generally between 7.5 and 10. So if we're looking at something like this, the ERP of the stock market moving forward is really, really bad. Now, as an investor, you would be thinking about this. Doesn't mean you would sell out, but it would certainly be something that you would be watching on your screens and charts. Let's also discuss the idea that short covering has become a thing. Yes, it has. A whole bunch of big players removed their shorts over the last 2 weeks. And we actually noticed that JP Morgan and Goldman Sachs, and I've seen this in other reports, noted that over the weekend, the last week's short covering in macro products was in the 100th percentile versus the past 5 years. The last time this happened, I believe, was somewhere around November of 2020. So maybe we'll draw some synergies there later on in today's video. We also know that the NASDAQ, when it has a great first half, tends to have a pretty bad Q3. Q4 certainly improves. And then, of course, full year return usually looks pretty stellar. Keep that in mind. If it's going to be weak, generally it is relatively soon. Let's go over to the wonderful world of options. What was unusual? What was pretty lackluster? Well, the first thing that was unusual was we saw a lot of trade in Disney, and it was down 3.5%, and of course 2.93 times the standard options volume. That's a pretty big deal. We also noticed that a couple of the stocks we've been talking about, although they did hit our first take profits on last week, Zoom and PayPal were having some nice gains. So we saw, again, just hyper stocks, ARK-K style stocks, those types of things with big options on them, starting to play catch up to some of the rest of the market. In terms of size, the options volume was pretty low. We expect that into earnings. Now we're about to see size volumes probably spike up. So 35 versus 39, 60% calls. Let's look at rotation of the last 5 days. Gold still number one, but not maybe for long, but I still like the shiny metal. It's looking good. And defensives and utilities and things really bad. And of course, demand destruction. We talked about energy. That looks pretty weak on the charts, and we'll look at that later on because it could really point towards metals, energy, and those types of positions being a short in a market that still is actually technically long. Let's move over to 10, PBW, semiconductors. They were the best over the last 24 hours. And again, defensives in the worst move. So that's not usually traditional with a market that's about to sell off. We want to see healthcare, utilities, staples actually showing some signs of life. They just did not. Let's move into the charts now. What are the most important charts? We'll cover them first. Then we'll go through stocks, commodities, and of course the indices later on. But this is one of the most important charts right now. It's got to do with yields. If we do see a spike in inflation, of course, we expect US 2-year yields to go up. If they break through 5.1, you need to be paying attention to that. Doesn't mean it will, but if it does, set an alert, have it there. Just don't let it expire and see what happens. If you get, at least you know when it does go through that. That 2-year 5.1 is a big level for bears. Let's talk about Magma, which is, of course, Microsoft, Apple, Google, Meta, and Amazon. No weakness. There's just no weakness. 2 dojis. So I guess that can be considered that this is pretty happy where it's at. Equilibrium ahead of earnings. But yes, they are just floating around these highs at this stage. The skew did get crushed. That's interesting. So we saw some skew crush, which of course is synonymous with often the bears coming back into the markets very soon. Maybe need another 1 day of skew crush, and then we'll see whether the earnings are a catalyst. We've got some big ones over the next 24 hours. RSP, the equal weighted market, is holding its own for now. It's just floating around this level. So it's showing us that there is some rotation into the markets, and we've seen that with the Russell 2000 together and so many other things. High yield bonds, yeah, they're floating around at the highs, nothing to note there. And of course, central bank liquidity is massively disconnected from the current market, the most we've seen in a very long time. Look how deep red that is. Now, that doesn't mean it's going to turn, but it certainly means that there is a huge discrepancy. And I think the thing that's becoming most interesting to me, and I haven't even updated it recently, is how many gaps there are on the right-hand side. Some of the most I've ever seen. And usually these gaps will eventually fill. I mean, at least a huge portion of them. During this rally, we've basically filled only like 50% of them, maybe even less. So it's a surprising statistic. For a lot of bears or bulls, you're looking at the VIX as well. I think the VIX has a 100% gap fill record in comparison to other markets. And there is still a gap remaining, 12.12. Might be worth setting an alert there on the VIX, and maybe that is the catalyst level. We'll be watching that one. TLT, Treasuries, doing well, sitting in the middle of the zone. Not really super bullish on this until it goes past 104. And you've got to really consider here, what do you think's going on with yields? If you believe yields will spike, Treasuries will not be your friend. If you think that yields are going to come down and continuously go bad, and then that the maybe central banks of the world will have to cut rates and cut them aggressively, well, you'll like Treasuries. So, of course, we'll be watching it. At the moment, it's just kind of hovering in buy demand. Let's move over to the US dollar. Now, a lot of people are considering this to be a super positive sign for the markets because money out of dollar, equals, but or at least money weakness in dollar equals more institutional potential investment from overseas. A lot of other things go into it as well. But we've seen some consolidation here. We know this is our very important zone demand level. We go to the 2 hours. We're kind of hoping if you're actually a dollar bull, what you want it to do is make a new low, then rally through that high. And at that point, we're probably looking for a little bit of relief. It's been a very aggressive sell-off. If you're somebody trying to get into a short here, it's probably not the best place to do it anymore, but you're certainly looking at these previous supply zones now, and you're looking at them as drop, base, drops, base, etc. Supply demand theory, very good, I believe, on this chart moving forward, and we'll continue to follow the dollar very closely. Has gold been doing well? Well, it's still in this zone. I'd like to see gold fall off more aggressively to allow a little bit more of purchasing, but at this stage, gold looks like it's a flag almost, but it's coming into a tough zone, and I do think we've seen a big movement last week into gold. And specifically, we saw stocks such as GDX, which is, of course, the gold mining sector, finding double bottoms and very strong acceleration off that CPI print. Now, if we do believe yields are going down lower, and that's something that a lot of you in the community do think, then gold is usually a beneficiary of that. Also, some unstable times coming forward over the next 2-3 months could be interesting for gold. Let's move over to US oil. It came down to the resistance equals support. And see, we have the line here. Do I like US oil here? The answer is not really. I actually think it's quite weak. And specifically, I'm looking at energy stocks, and I don't like what I see. I mean, they bounced up, which I expected a short-term rally. We hit almost 77, 60 a barrel. I think we hit 77.20 something. We saw a tweezer of some kind, or at least an island reversal, really through here. And then we got that rejection. So it kind of points towards rallies being set by sell demand. And this goes into the line of demand destruction. If we go over to copper, which is often considered our main tool for this, copper rejected the supply again. If it breaches this high, set an alert, that will be a very big sign. But at the moment, copper is still weakening and still showing us that it may not be so healthy around the world. Specifically, I think China is starting to struggle in a big way. They're going to need stimulus at some point. My thought process is October during their meeting. What do you think, though? I'd be interested in some of your predictions. When will stimulus come? Will it not come? Let us know in the comments down below. RK resurgence definitely came back up. We saw a weird print on this last week. We already reported on that one. I don't know whether it's a buyer or a seller. Initially, we got sell-off. Then we've seen rally. Next 24 hours to 48 hours will probably tell us whether it was a big buyer or seller, and then we can hopefully react to that type of market movement based on the fact we know a big player was there. Nvidia must be watched because we know this is the market leader for sentiment at the moment. It hasn't shown real signs of weakness just yet. I'm looking for actually around a negative 15% move from top to bottom. And you might think that's a ton, Tom. Well, yeah, I need this thing to actually show us that it's going to really sell off. You can see here, this is -6. -15 would take you down quite a lot. But I'm looking for a very aggressive sell to come through to tell us that really someone has dumped massive positions of Nvidia. We just don't know that yet. It's still in an upward trend. Could it go to $700? I don't know. It's possible. Anything's possible, but at this stage, we're looking for that big sign of a huge sell-off. And we haven't got it yet. Then we get a rally because everyone's like, buy the dip, let's go. I'm not so sure about the buy the dip at that point. Let's talk about Tesla earnings in only a few days. And we know that we're sitting close to 300. That's the next obvious level. We saw huge trades going through here. We reported on them last week. They were massive. I mean, in a big, big way. And I don't know what they were. I mean, obviously at this stage, it looks like they were buys based on the current price action. But 300 is what most people have targets for ahead of earnings. Is it a buy the rumor, sell the fact? It's been like that a lot of the time with Tesla, so you got to be careful. We'll move over to the mouse now, and it is shocking. It's like the anti-market right now. 85.56. Disney breaks a new low. We were bullish on it during that island reversal over here, but of course we dropped that and said no. We sniffed it out. We didn't like what we were seeing. 84 is the next obvious target, and then underneath that, we're probably looking at like a 78-ish. These multiple year lows, 2014 and 2020. Disney does horrible in these pre-election years, really bad. So it's actually on form for what it's doing, but it does usually come back the next year. So could it be investment opportunities on the horizon? I don't know, but it's not doing very well on the charts at this stage. XLV Healthcare had some good prints on it on Friday. Didn't really resurface on the Monday. I will be watching that very closely this week. Island reversal on the lows. Looks like a momentum style play. Next 24 hours should be important for XLV. We move over to the Australian market, limbo land. I'm sorry to tell you, Australians, I don't really know what it's going to do next. I could definitely see that the buy from here was going to go through to at least this level, if not here. But now we really just wait for the US. S&P 500, what does it do? It's most important. Let's go through other indices. The German 40, the DAX. We talked about this being a short-term time frame kind of sell. So far, so good. It's sold off. Found a bit of demand here. Bought up. We're looking for new lows. Mark underneath that low there. Set an alert. If that happens, probably markets around the world are starting to weaken because the DAX, remember, was our Wyckoff distribution. So it went a little bit extended to where we thought it would come in. Then we saw a first time frame, very small time frame change of trend. And at the moment, you're hoping for further weakness through that particular indice, because if this index goes weak, it's going to really show us that maybe the rest of the world is a little bit more sick and things are starting to heat up into that 2 to 3 months. US 30, I mean, some people think it broke out like the transportation index. A lot of people looking at Dow theory, which is that thing we spoke about at the start of today's video, which is the Dow Jones Transportation Index breakout. Do I think that it matters nowadays? The answer is simply, I don't think so. It's too old and it's like an indicator that worked a long time ago. But the Dow has tried to put in a new high, and the Dow Jones Transportation Index, that you can see here, has been a little bit stronger. So yeah, I mean, it's a good sign if you're a bull. This is the type of rotation you want to see, but I'm not sure it matters anymore, unfortunately. NASDAQ, shooting star, new high, little bit of a sell-off. Took everyone's stop losses if they tried to short it again. So hard to short this market, isn't it? Especially with traditional tools, unless you're using options, and then they cost a lot. You can see here the high was stolen. So a lot to watch over the next 24 hours. I'd be marking in just underneath here, so underneath that low, which you can see here at about 15,527. Could it be a double top? Could be. We just don't know what it is at this stage. Trend is still bullish. We've hit into the US 500 zone, which is that 45.30, 45.40. We almost hit the 40 over the last 24 hours. We can see the weakness. We also know that this low is here. Now, I was doing a live stream, which we do every Monday. And of course, we do that for the market open. So subscribe if you like those types of things. And we thought it would get up to about 45.20 and then maybe a bear would come through. There was just nothing. There was no bear. The market went up, rallied, took a new high, came back down, and we're just kind of floating around this zone. We now have a decent level of demand space, though, around 44 or 4,500 flat, which is interesting. And I think this is just really about earnings. So wait for the earnings, react to it, see what the market actually is telling us. At this stage, it's still bullish. We're in the zone for the US 500 in particular. We know this is such an important area that it's tapping into. Previous highs back in February of the rallies and also the April-March rallies. So super important area, but just no signs of weakness yet from the S&P 500. And then we move over to Bitcoin. What's it doing? Nothing at this stage. I am excited for crypto moving forward, but not at these prices, not until we break out. We thought we might see a weekly close above. We did not. There was nothing there, and that's why it's so important to react and look for the close. Unfortunately, sometimes that can get you in. We watched the reaction here. It ended up going negative. There was a little short that some people could have placed back down into the range, but you are fully coiled here. And we know what happens with coils when they break out. They can be very aggressive. Like pretty much what we saw with the March into, not March. It was basically the June-May kind of sideways market that we saw in the S&P 500. When that exploded, it went in a big, big way. Let's move over to now the week ahead. So we'll click here and we'll check out what the news that you need to be watching is. And you can see that from Tuesday, we have the CAD. We've got core retail sales coming out at 8:30 a.m. Might be an interesting number. And then we scroll through, bunch of other central banks doing stuff. Unemployment claims here on Thursday, again, 8:30 a.m. New York time. But really this week is about earnings. And that's going to be the most important charts for you guys to watch at this stage. So get on your earnings. Make sure you have your earnings chart such as this. and make sure you're aware of what's coming out when it's coming out. Before market, after market, all these types of things are important. I'll post one over on Twitter a little bit later as well. So follow us at FX Evolution. As always, thanks so much for watching. Hope you have a great day and good luck in the markets over this very exciting next 2 to 3 weeks. Bye for now.